Hello, everyone, and welcome to our first Rock Valley Investment Services webinar. My name is Allie, and I will be your host slash moderator for the entirety of the webinar. Today we have Matt here, Matt Weldon from our investment services team that is going to speak a little bit about the topic of the day here. Some housekeeping before we get started. Please make sure that your video and audio is muted throughout the entirety of the webinar. After, we will have time to go through any questions, anything you guys might want to mention. We will, like I said, we will answer those at the end. If you would like to leave them in the chat box, we can answer those. Without further ado, I will lead this over to Matt, who will get started on our topic for today.
Thanks, Allie. I appreciate that. Hello, everybody. Thank you for taking time out of your day today. I know you've got a lot of options on your table, especially now, but I do appreciate you spending a half hour or so really just kind of sitting down and learning something maybe new. And I think as a financial advisor, my job is to always make sure that my clients and the members have as much education and information so they can make quality decisions on financial decisions, whether it's now or later on. So let's get started here. That's my ugly mug there, Matt Weldon, private wealth manager. My cell number is on there directly, 815-990-8421. I don't have set office hours here, so that's why I give that number out. I'm either here in the branch at the Loves Park, or I'm out with members at their home or businesses. So again, I don't really have set office hours, so that's why I give that number out. And then at the bottom, disclaimer that we have to put out there, basically says that I'm licensed in the state of Illinois and Wisconsin, and this is not intended to be a sales seminar. The purpose of the seminar is to provide you with general information on final expense policies. It says there will be an opportunity to schedule an appointment for an individual consultation at the end of the seminar, and it also says there's no obligation to do that. So got to throw that out there, a little bit of housekeeping on my end. So just a quick little blurb about myself. This is my 21st year as a financial advisor, and I could not have chosen a better career. I get to help people on a daily basis make decisions that are impactful not only that day, but 5, 10, 15, 20 years down the road. And I truly love what I do, and not many people can say that, and I am truly grateful that I have the opportunity to do this every day. So that being said, let's jump in here. So how complete is your plan? Now we're talking about end of life planning, and I know that is not exactly a fun topic to talk about, but you know, in my world as an advisor, doing a complete job holistically planning for my clients and members, I have to make sure that we're not only hitting the topics about, you know, 401ks and IRAs and annuities and estate planning and whatnot, but I have to make sure that we have checked off all the boxes. And something that gets overlooked a lot is these final expense policies, making sure that at the end of the day, somebody isn't stuck with the bill when you pass away. Now, I hear a lot. Again, I've been doing this a long time, and these are some of the bullet points that people talk to me about. Well, I have life insurance to take care of my end of life expenses. Well, you may have that now. You may have it through work, and a lot of times, once you leave a job, that life insurance does not leave with you. And if it does, it could be extremely expensive because you're no longer in that group life insurance plan. You're on an individual plan, and you may have to go through underwriting, and who knows what your health is going to be. So that might not be an option later on. I also hear a lot, this is when I hear it most of the time, well, I have plenty of money to take care of that. Well, you may have plenty of money to take care of that today or tomorrow or next year or whatnot, but I don't know what's going to happen, and nobody knows what's going to happen 5, 10, 15, 20 years from now as far as your assets go. You know, it only takes a 2 or 3 year stint in a long-term care facility to spend down quite a bit of money. I think the last time I looked, the average nursing home or long-term care facility was anywhere between $8,000 and $10,000 a month for that. So the average stay in one of those places is just under 3 years. So if you do the math, we'll do it 8,000 times 12. That's 12 months. That's 96,000 a year times 3. We'll just round it up to $300,000 that potentially could be spent down. So the point of that is, you've got money now, but I don't know what's going to happen later on. So we want to take the guesswork out of the end of life expenses. This one I hear a lot as well. Oh, my kids or relatives will take care of it. I mean, is that really what you want to do? Is leave that burden to your kids or your sister or aunt or uncle when something happens to you? And who knows if they're going to be in a position to take care of it. I've seen, unfortunately, where people have had to put their parents' funeral on a credit card because they didn't have the cash available to pay the $8,000 to $10,000 that they were looking to have them to pay. And nobody wants to leave a burden to their kids or grandkids or relatives or whatnot. So, I just think that that's one of the most important things, is to make sure that you're not leaving, that burden to anybody else. And then really what I also hear from a lot of people is, I really don't have a plan, because you know what? Nobody's ever talked to me about this before. I've never even thought about it, or I don't want to think about it because I don't like thinking about dying. Well, let's face it, nobody wants to talk or think about dying, but it's going to happen to everybody. So we just want to make sure we're doing the proper planning to make sure that at the end of the day, things are taken care of in the smoothest way possible. So I get a lot of questions about, well, geez, how much does a funeral cost? Well, that's all depends on your final wishes or request. But you should have gotten that brochure or pamphlet earlier on the original invite. But according to the National Funeral Directors Association, cremation on the average is about $5,000, and a funeral is about $9,000, and that's without the grave space, monument, or service charges included there. So you might be looking anywhere between $8,000 and $15,000 total. And remember, that's in today's dollars. 20 years from now, that number is only going to be higher, and we want to make sure that we account for that as well when we're planning these final expense policies. So again, I can't answer that question. I can only give examples, and it depends. I know some people want to have some big lavish funeral, and other people are like, I don't care if 2 people show up. I just want a very simple, simple wake and whatnot, and maybe a little party at the end. It all depends on each individual. So move on to the next one here. How will my survivors pay for my funeral? Again, getting back to the B word, burden. Why burden anyone with a bill at the end of the day? Death is an emotional strain. You don't want to make it a financial strain for them as well. I've seen firsthand how it emotionally affects people. My father passed away 10 years ago in December, and it was out of the blue. Went to bed on a Tuesday, didn't wake up on a Wednesday, and we had no idea that that was going to happen, obviously. So my mom and sister and I are pretty old-fashioned, old school. We don't show a lot of emotions. The one time I did see my mom break down is when she was writing a check to the funeral home. And that kind of said, you know what? I am putting my husband of 35 years in the ground in the next couple of days. And she broke down. And that right there is something that I talk about, because I don't want other families going through that. And this final expense policy takes that emotional burden off of people writing checks to the funeral home. So how it works, essentially, the final expense policy, your survivors take the final expense policy to the funeral home or the crematorium. Okay. And you walk in to whatever funeral home you want, and they're going to go through and you're going to pick out the casket and this and that and the other thing. And there's going to be a final bill, and they're going to send that invoice directly up to National Guardian Life Insurance. And that's the life insurance company that I use for these final expense policies. They're going to get the invoice within 2 business days. That invoice is paid directly to the funeral home of your choice. Okay. It's paid directly to the funeral home. And what's left goes to your estate as a tax-free benefit, because the policy is a life insurance policy that is always tax-free to the beneficiaries. So what's nice about this type of life insurance policy, it's a guaranteed issue policy, meaning you could have 14 different diseases right now, or you could be essentially on your deathbed, but this is a guaranteed issue policy, and everybody that wants it can get it. And that's a bonus for a lot of people, because some people that are not in the best of health want to take advantage of this, because they know that if they try to get something on their own, they may not be able to get it. And if they could get it, it could be super, super expensive. So the one thing that I always caution people though about is when they walk into the funeral home with the policy in hand, you don't have to show your card, so to speak, right at the beginning with the funeral director. Because if you walk in with a $10,000 policy and say, hey, I got a $10,000 policy here for my mother who just passed away, more than likely, and I don't want to paint a bad light on people, but more than likely they're going to try to take that expense up to the $2,000 or $10,000, I should say. And I've seen it firsthand, and it's not something that I like, but it does happen out there. So just a word to the wise on that. So do I have to plan my funeral now? Well, no, you don't. The choice is yours, but I always talk to people about always plan for the worst and hope for the best. Because if you plan for the worst, you've eliminated a lot of bad things that could happen. And again, nobody's guaranteed tomorrow. Be proactive to eliminate future dilemmas. I have a lot of people that are very, they like to put things off, to put it nicely. And unfortunately, I've seen people put things off, and then bad things do happen, and then they call me back and they say, hey, we want to do this or that. And I have to say, well, we can't do that, because you've now lost your job, or because you're unavailable to do this plan or that plan. And it's just the right thing to do, to be proactive. Get things checked off your list. And that to me is something that I talk to my clients a lot about, is being proactive and checking things off the list and building positive momentum. We're talking about the complete financial plan. And again, this final expense policy is a small part of the complete financial plan, but a very important part, because at the end of the day, you just don't want to hope that you have assets left. That's what the last point here says. Will you have the assets to do it later? Nobody knows that. So the benefits of using a final expense policy, like I said before, it's guaranteed issue no matter your health. There's literally 2 signatures, and it's a one-time payment. You don't make monthly payments or yearly payments. You pay in anywhere between $5,000 and $15,000, and $15,000 is the max. In my world, I don't know too many people that need a $15,000 funeral, but some people are hedging against inflation and doing the max now, because their dollars are going to be worth less later on. Again, getting back to the B word, eliminates the burden for the loved ones at the end. What's nice is that there's portability to the policy, meaning that if you get the heck out of Dodge, especially on days, and seems like last couple of weeks like today, when you look out your window and you're like, you know what, I'm done, I'm moving to Arizona or Florida or South Carolina or wherever, you can take this policy wherever you go. You are not locked into one funeral home. And that's key, because if here's what happens, and I get this question a lot of, some people say, well, why don't I just go down to XYZ funeral home and pay them directly? Well, here's what you're doing. Essentially, you're giving the funeral home an interest-free loan on your money. You're writing them a check for $10,000 and saying, okay, hopefully you're going to be around in 30 years when I pass away, and you're going to take my money now and essentially invest it in your business as an interest-free loan for yourself. I'm not into giving money away, and I'm certainly not giving money away at an interest-free rate. And that's essentially what you're doing when you prepay through a funeral home. You'll get different arguments on that, but that's essentially what you're doing. And let's face it, funeral homes are businesses. They can go out of business, and if that happens, then you fall pretty low on the creditor list to get your money back. And I'd rather have control, have your own policy where, when something does happen, your beneficiary or your the people that are left can use that directly, and you don't have to give up control of your money. So it also keeps assets safe from creditors. So if you have to spend down your money to, if you have to go into a long-term care facility or a nursing home, the government makes you spend your money down to $2,000, and hopefully you understand that, because some people, when they're faced with that, have no clue that they have to do that. And unfortunately, I've had plenty of clients over the years that have seen their parents have to spend down their assets or gift their assets away in order to qualify for those benefits. And that's what I was talking about there. It avoids the Medicaid spend down. So that's pretty much it. It's a very simple topic that a lot of advisors don't really talk about. And from my perspective, of someone that's been doing this for 21 years, I try to do the complete job for my client, whether we're talking about their current 401k or setting up some type of income stream later on in retirement, or we're talking about gifting strategies for their grandkids or kids, or we're setting up a trust or a will through the trust attorney that I use here in town. What I want to do is make sure that when my client has a problem, they can call me and ask me just about anything financially related. And this final expense policy is one of those things where, again, people don't generally talk about it. And when I'm sitting down with members or clients that have other advisors, another financial advisor, and I'm asking the question, has your financial advisor talked to you about final expense planning or final expense policy? 98% of the time they say, no, they've never asked me about that. Well, to me, that tells me that are they getting the complete job done with their financial plan? And these little things add up. And I just want to make sure that at the end of the day, nobody gets stuck with the bill. And it's an easy fix. Like I said, you pay into it one time and then you're done. There's not any fees, there's not any ongoing expenses. You actually have a physical policy that you have, that you keep it in a safe or in that famous junk drawer that I know everybody has, or safe deposit box at the credit union or a bank. And then when something does happen, you've got that in place to take care of that. So I know I kind of went through a lot in 20 minutes or so, but I wanted to keep this somewhat short because I know people have a lot going on today. It's the middle of the day. You probably want to eat some lunch and whatnot. But is there any questions that I can answer now? And before I say that, what I normally like to do is talk to people individually, because let's face it, talking about death and whatnot is kind of a private issue. So what I usually try to do is schedule an appointment here at the credit union and really just have you come in and have a casual conversation about what's going on, what you've been doing in the past, what you're doing now, and most importantly, what you want to do going forward. And that to me is the most efficient way to talk about things. But if there's any questions now, then I'd be more than happy to answer those.
All right, I don't see any questions in the chat box currently. We will be sending this recording for everybody that's participating. We will send this after in a follow-up email along with Matt's contact information that you will find here and our social media as well. If you do have any questions at all, please feel more than comfortable to reach out. I know Matt is more than happy to answer any questions, comments, or concerns that you guys may have regarding end of life planning. So thank you, Matt, for having this first webinar with us. We greatly appreciate it. Thank you all for attending. And then stay tuned because we hopefully have some more webinars coming soon. So thank you guys. Thank you again, Matt, and we will see you all soon.
All right, thank you.